case, it's been increasing as well, because it's taking longer and longer for payouts, both on the master nodes getting paid in terms of the reward for protecting the network, and also the confirmation nodes, or the wallet stakers, serving as the first line set of confirmation nodes within the network. That's the first tier. Second tier is the master nodes. So we have 69.15% of the coins locked up. That is a dip from previous weeks, or when you look at last week, we're almost at 70%. So that gives some indication that the number of, or the percentage of coins is not increasing in terms of the amount locked up, despite the fact when we go to the chart here, we see that there are 1,166 master nodes. Now, just let's begin to think about this from the perspective of, you're increasing the number of master nodes, protecting the network, but yet at the same time, the number of coins locked is decreasing almost by a full percentage point. And let's go back and look at that again. Clicking here, almost 70%, 69.95% versus 69.15%. So you're looking at roughly, definitely over, let me just quickly do the math right here. 0.69, 0.95, 0.16, almost a little bit close to 0.8 percentage points. So that's 1% of the total coins, if you round up to one, roughly 1% of the coins no longer locked up, but they're on the market. Just keep that value in your head, that 1%, despite the fact that there are more master nodes, going from 965 from the previous week to 1,116 master nodes. You would think with an increase in the number of master nodes from week over week, and at the same time, the nodes protecting the network at the master node level and at the confirmation node level, there should be some corresponding increase in the amount of coins locked up relative to the percentage that's on the market. So there's 1% slippage from last week to this week. In essence, more coins are actually being placed onto the market for sale, or within the wallets themselves. So think about that 1%, that's actually that change from last week to this week, despite the increase in the number of master nodes, from going from 965 to well over 1,100. That's something to begin to think about. And we have a dip in the price of the master node. I think last week, just clicking back and forth, $6,104 of master node, almost 1 Bitcoin for master node. And I think these are a variety of things we should begin to consider as we talk about this dip that's happening. So in essence, a dip in the number of coins locked up, going from almost 70% to roughly 69.15%, looking at that 0.8. For discussion purposes, I'm just rounding it up to 1% additional coins into the market, either on confirmation wallets or specifically on the exchanges. So more coins are being sold on the market because they're not locked up. Looking at our total market cap, roughly 5.7 million. The number of master nodes, that was a dip in the total percentage. Our master node network value is 69.14%, at 3.4 million nodes and wallet, 1.5 million in nodes and wallets. And roughly, this is a rough estimate, and it's not accurate, and I'll say it once again every single call, just as you know, we have about 4% of the total coins now being traded on the exchanges, and just using a rough approximation, half by bots, another half by humans. So 4% on the market being sold. But then quickly looking at the master node, the number of master nodes coming online, more and more master nodes are actually being added to the network, which is a good thing. good thing, but at the same time, it's decreasing the ROI. And when you begin to look at, and we've been getting questions in the community, and I'll address some now, where people are saying, well, you know, we're losing market cap, we're diffusing the project because of LGS and LPC, and I think now it's appropriate. Starting next call, we'll have side-by-side comparisons looking at both LPC and LGS in terms of market cap, masternode, so you have a sense of both projects occurring at the same time, and you'll be able to do a side-by-side view of each. But those are the general statistics that we have around the volume, the market cap, number of masternodes, percentage of coins locked up. There are more coins actually on the market now, and I have a few reasons as to why some people may say, hey, there's a sell-off, or on the more cynical side, hey, the devs are dumping on the market. Now, if not having any perspective about the team and what we're doing and the values that we have in building out this project, one could come to a conclusion that, hey, the team's dumping these coins on the market. And if you look at that percentage dip from roughly 70%, 69.95% to 69.15%, that 1% difference, would make a huge impact in terms of an overall exchange rate of or percentage of coin on the market, moving from 5%, add an additional 6%. But then you don't necessarily see that here, and I could give some explanations as to why, but that's just the general overview around the statistics. But let's keep that 1% of the coins, or 1% of LPC, being pushed out onto the market as compared to last week when you had almost 70% of the coins locked up. But 1%, given that 5% is usually the amount, 4% is the amount that's usually on the market. Now we're seeing somewhere around the tune of an additional 1%, adding 5%. That can make a huge difference in terms of the price action, because 5% that's on the market is influencing the price, or 4 to 5% of the entire coin is really what's influencing the price up or down. So once again, you have that small percentage, less than 10%, influencing the price. So it could be the case someone coming in with a $250,000 buy or $500,000 buy or sell up or down could swing the market to change sentiment, to have people either begin to flood and say, hey, you know, the team's dumping. But once again, I can reassure you, no one's on the team is actually dumping any of the coin. So just moving back to the topics in general, 822, LPC stats, general market analysis. Talking about the general market analysis, there are a few things that are happening that I think should be taken into consideration when members of the community begin to ask questions about what's happening with the price. And now I'm going to move into a general discussion about perceptions around the price. Even though I don't like focusing on the price at all, I really enjoy talking about the value that we're attempting to bring for this long-term project. And it's not, and it's fair. No, people like looking, checking to see what the value of the coin is. But once again, that's 5% of the market that's persuading or changing your perception about the project on a day-to-day basis. So I really want to talk about the things that I go through on a daily basis, considering that, once again, when we started the project, I did not take any pre-mine. We used those funds to get them to exchanges, to pay marketers, to actually buy conference sponsorships. And it was the case, like me, I bought on the market just like everyone else. So I wanted to have your perspective to know exactly what you all would think on a day-to-day basis as you looked at the price. Even though, once again, I like to focus on the value and the progress that we're making on the project, and then be able to convey that to you all so that you have more of a value orientation and not necessarily looking at this as a speculative venture where you're just looking to get high ROI in the short term, but not looking out for the future. Because once again, cryptocurrencies, Bitcoin in essence, the first cryptocurrency was developed as a consequence of a crisis, of a financial crisis, or institutions of eroded trust that caused a financial collapse, which birthed Bitcoin, the cryptocurrency. So now cryptocurrencies as a market in general was birthed out of chaos. It was birthed as a consequence of a crisis in trust, or a breakdown in trust. And when you look at banks, when you look at how some governments begin and banks begin to move in a direction, not taking into consideration the responses of the people, and we have these very small attacks on our economic sovereignty in terms of what banks are doing, and how institutions of eroded trust in the banks, credit card companies, some government organizations, not only within the United States, but across the world, and how they've responded to this financial crisis. The financial crisis, what we've done as a consequence, developers have gotten together, created this new technology to help us to see something different. We're going through this process of transition. It's rough, I understand it, but everyone here who's made an investment within cryptocurrency, we see what the value is at the end of the day. We see what the goal is, to have an alternative to what the traditional banking system and what these institutions, so traditional institutions of trust, these third parties and intermediaries, what they were doing. But now we see an alternative that's guided by the people in building out the cryptocurrency market in general. So I'll just begin to give an explanation of how I look at LPC, how I look at the cryptocurrency market, and how I begin to come to some conclusions. Looking at the general market, when we begin to think about LPC from the perspective, or the general market of cryptocurrencies, right now the general market, we are in a bear market. What typically happens in a bear market? Do prices go up or do prices go down? From a macro perspective, when we're looking at the entire market, because we're still in a bear market from all of the indicators, but even though there's some sentiment that the market might be flat and we may be getting ready to trend up into a bull market, but for the most part now it's trending down. Thinking around the bear market, on average, it's a trend downwards, not necessarily a trend upwards, which most people would think. In that case, prices would generally go down. But now it's the case we're flattening out, and we may be emerging or pulling out of the bear market, and now prices will be somewhat flat. But with the postponement of the decision for the ETF, that sent sentiment downwards once again, and we're still trying to recover from the negative sentiment from in a bear market around the ETF decision, which the market dumped all the way around. So that's one contributing factor, objectively, just looking at it. When you look at the market in general, bear market still, there's some negative sentiment because of the decision, which has impacted the entire cryptocurrency market around the globe. We're impacted by that, being a part of that 1%. Looking at masternodes in general, 1% of the cryptocurrency market is in masternodes. We're still a part of that general market, so that's something that we should take into consideration from a macro perspective. But also, we're human. Because we're human, and I think it's good that I have a perspective as a cognitive psychologist. There's a course that we've taken in like advanced studies in psychology. It's called judgment and decision making. Within judgment and decision making, as humans, we have a lot of different biases, or we have some very fast psychological processes that we go through in order to keep us alive. Some of these cognitive processes, they help us in situations where we have to make quick decisions. Like, for instance, it doesn't take a genius to recognize, hey, if you're walking in the public or walking out, say, on a park, on a sidewalk, and you see a lion, or you see an elephant, or you see some wild creature or a panther, you don't have to think to run. You're automatically going to do that because that's a part of your survival instinct. So we do have some of these emotionally driven decisions that are made that help us to survive. We're not going through a rational process of thinking, hey, this lion is not going to attack me because I'm a man. They should recognize that Homo sapiens, we're on land and we are the king of the hills. Therefore, that lion is going to reason that he's not going to attack me. No, that's going to get you killed. We have these very quick cognitive processes that we go through to keep us alive. At the same time, because of these cognitive processes that we have, we go through a somewhat emotionally driven process to respond. And one of those in particular is recognized within the cognitive psychology, behavioral economics literature as external attribution error. With external attribution error, we go through this process of any time that there's something that occurs in the environment where there's a response, there's some type of behavior that a human is eliciting within an environment. If it turns out to be good, or if it turns out to be favorable, we tend to attribute that positive aspect or that positive outcome to ourselves. It's more internal. It's more internal. We say, I made an investment decision. The stock goes up. Because it goes up, it's the case that I'm a good investor. I made a smart decision, and it's mostly attributable to me. I'll tell all of my friends about it because, hey, I made this investment. You know, it came back 50-fold, and now I think it's something that you should do because I made the smart investment. I'm a smart person. You're associated with me. I'd like to help you. I tell you, and you make an investment yourself. I hope it makes sense what I'm beginning to talk about. That's from the perspective of something going good. That's the internal attribution. We say because we made that particular investment, that investment went up, it was a positive outcome for us. We internalize for ourselves that we're great investors. In contrast, anytime that there's something that's inconsistent or not aligned or not necessarily positive with your intent for engaging in a particular behavior, you attempt to attribute what was the cause of that particular outcome. Say if the price of the stock goes down, or in this particular case, if the price of a cryptocurrency goes down in the market, which in essence, we've already classified only 5% of the cryptocurrency market. Well, when you look at LPC, only 5% is driven up and down. That's driving the decision and this driving perception around the source of the project, in spite of the fact that we have 69% of the coins locked up and another 29% or 23%, I don't know the exact number, going back here, just look here, it's pulling up, going back here, around 26% up in master nodes and in confirmation nodes, 69% master nodes, roughly nodes and wallet confirmation nodes and regular wallets, around 25%. But then looking at that 5%, that's driving your perception. Because you're having that 5% drive your perception, and you're viewing 5% driving your view about how the project is going. Now you're saying everything is bad. The stock price or the price of LPC is going down. Because the price is going down, I have to ask, why is it happening? Initially, because if things are going up, you're attributing to itself and saying, hey, sometimes in general, that's what's happening. Not all people say it's good. They begin to say, hey, the team is doing well. But most people in general, on average, attribute positive things to themselves, and bad things that happen, they attribute it to others. From a cognitive perspective, it preserves self-esteem of individuals going through that process. Anytime there's an action or anytime something happens, it's positive, it's themselves. If it's negative, it's other people. If you like to look up, there's two people, Kahneman and Tversky. They won a Nobel Prize in economics, even though they were psychologists because of their work in behavioral economics. and particularly in their work around framing. And that's another aspect I think we'll begin to focus on a bit later. But in terms of economics, they turn the perception or turn the common view on its head that people think rationally in markets. But it's actually the case, people are not rational in making decisions. Even though it's the case, you can present information very objectively and walk through the steps, people regress back to their emotions and how they make decisions, and then they have attributions around their emotions. So going back to the perspective of this specific cognitive bias of external attribution error, even though there's availability bias and there's primary and frequency, primary and then post-secondary, or I'm trying to recall the term exactly right off the top of my head, but I'll bring it back to there are about 15 to 20 different bias. Primacy and recency, that's what I was getting off the top of my head. Primacy and recency. If you see something first, you're likely to remember it. See something last, you're likely to remember it. Anything in the middle, you're going to forget about it. So because this is in the middle in our talk, you're going to forget about, more than likely, this cognitive bias. But anything that's positive, you attribute it to yourself in external attribution error. But anything that happens that's bad, you're going to attribute it to others in order to preserve self-esteem. But now let's think about it objectively again. We're going from the notion of how is the price decreasing? Once again, 5%, 4 or 5% of the market is driving that perception. And that's indisputable because we see some of the statistics there around the price. But yet we do see a decrease in the number of coins locked up, despite the fact there are increases in the number of masternodes. So it looks like more coins are being placed on the market. How is that so? And I'll begin to go to the reasons around that from the general market analysis to the specific market analysis, things that I look at. We talked about the bear market going down. If there's generally a bear market, prices tend to go up. Prices will tend to go down. People tend to sell in bear markets. Think about that once again. People are beginning to sell more than they are buying or even holding. At the same time, within the general market, we do have this thing called BTC dominance. If you look at it over the past few weeks, excuse me again, the BTC dominance has increased to the mid 40s to the high 40s, and even to this day now, it's around 52, 53% market dominance. BTC market dominance is going up. Now, with the general market, bear market is generally it's going down, with the BTC dominance going up. Within the cryptocurrency market, when BTC dominance goes up, what usually happens with altcoins? Do altcoins typically go up with BTC dominance increasing? Typically, on average, no. The BTC dominance going up, the altcoins tend to go down because some people say, I want to ride the BTC increase. And as a result, they invest more to increase a higher yield or return on investment. So within a bear market, BTC dominance, and also looking at some of the attribution error, rationally, we see objectively what is happening. But then at the same time, we're making some attributions as to what's happening from the perspective of what we're viewing. So every day I wake up, I look at what the general market is doing. I look at BTC dominance itself. I go to the specific 1% of the market that cryptocurrencies have within masternodes, and I go to Masternode Online, and I look at that as well. If most of you are looking through Masternode Online, it's the case that the price or the position of LPC is also going down. Now people are saying, well, it's the case, Damon, that LGS is taking away from LPC. One could make an argument on that on its surface, but then when you begin to look at what are the characteristics that increases our rank on Masternode Online. It's volume. So I'm going to take a quick pause to pause our screen and go to the web-based view so that we can see what's happening here to the web page. Here, let's go to this view. I'm going to go to Masternode Online. Masternode Online, we're there. Looking at Masternode Online, if you see my screen, you're seeing that LightPay coin is actually no longer in the top 4 or 5 position. 1, 2, 3, 4, 5, 6, 7, 8. We're in the 8th spot with 2.88, almost a little over $250,000. Now that's 288,000. But note, LPC is only reporting, Masternode Online only reports on the exchange where you have the highest volume. Going to CoinMarketCap, looking at where LightPay coin is, there's a shift. If you look at what's happening in the general on what CoinMarketCap reports. What CoinMarketCap reports is they report CryptoBridge, which is at 288, which what we just saw on Masternode Online, but it does not report any of the other markets. Because that's the case, and we listed on Cryptopia last week, there's a change in the percentage of volume coming from CryptoBridge. It's decreasing, and it's going to Cryptopia and beginning to spread also on Coin Exchange, because we wanted more diversity and we wanted to move away from CryptoBridge because of the perceptions around the theft. Now, with this decrease in the dominance or the percentage volume coming from CryptoBridge, we're decreasing our rank on Masternode Online. That feeds into the perception that we're losing our position to Logis Coin and losing our rank on Masternode Online. Masternode Online only reports on one exchange. I would recommend that we look at several exchanges in terms of what's happening in terms of the price. Even though looking at the price action, 373 is a little bit higher than what's happening right now at 253 on CryptoBridge. But yet that's managing your perception once again because of the shift in the volume, considering that we just went to Cryptopia. It's gaining more and more percentage of total volume, and decreasing the volume happening on CryptoBridge, which is lowering our rank on Masternode Online, feeding into the perception that we're losing dominance to Logis Coin and people are jumping over. So what I'd like to be able to say here is begin to move to the perception of taking all of these different things into consideration. We're moving on to more exchanges. We're actually going through the process of the volume changing on the exchanges. There's a general bear market where prices go down. There's BTC dominance that's increasing, altcoins lowering, and also looking at the internal biases that we have, where we're attributing it to these emotionally driven decisions of, hey, the team is dumping. I am fearful. I'm going to chat on the channel that these things are happening, but at the same time, not going through a rational process here. Now, let's go back to that 1%. I know I haven't taken questions. I'll take them shortly. Going back to that 1% of coin that's being dumped onto the market. So going back to last week, we're really at 0.85%. Going back to last week, looking at the coins locked up, 69.95%, 965 masternodes, to this week, an increase, 1,116 masternodes, but yet a decrease in the percentage of coins locked up. How is that happening, you ask? How can you have more masternodes locked up, a greater number of masternodes, but yet a lower percentage of coins locked up, even though it's the case we have more masternodes? Here's my explanation, and it goes back to economic theory. I'll do a quick stop to go to the web screen one more time. Here I'll share, and this is my last switch, and share that desktop. No, go to the web page here. Let's go to I can get to the site. I think this is the site here. No, that's not it. LightPay coin. No, LightPay coin. Look at the pay structure. Understanding the basics of economics. If you all are able to see my screen, I don't know if you all can see my screen in the profit diagram. Let me know, yes or no.
We're not seeing your screen right now, D. We're just seeing you.
Okay, let me share my screen. I apologize.
No problem.
Here we go. Let's look at the profit diagram. Going from the beginning, explaining this chart, this shows how much coins, how much the masternode holders and the stakers will receive as a consequence of the phase and where the blockchain is in terms of the block size. Moving along the different phases. Right now, we are on phase number 11, where the block height is between 120,000 and 130,000. The masternode owner is getting paid 16.68%. When you look at that 16.68%, which was much more than the 15.18%, excuse me, 15.18 coin, which was 69%, now we're getting more. We're getting 69.5%, a much higher reward from 22 to 24. More coins, LPC coins, are being placed into the market. Basic economic theory would suggest the following. If you have supply and you have demand and you have a price, if these two things are fixed, supply and demand, if they are fixed and price is fixed, you could change any one of these two things and determine everything else because it's 0 degrees of freedom. If we have demand as constant, supply as constant, the price should stay the same unless there's some external factor, for instance, the general market conditions pushing things up or down. It's the case the price should stay fixed. But I'm going to isolate this into just an experiment of looking solely at supply, looking at demand, and then looking at the price. Because we're increasing week over week the number of reward being paid to masternode owners, while at the same time the percentage being paid to masternode owners is actually increasing. It's the case more coins are actually being placed onto the market. If there is a constant level of supply, what happens? Does price go up or does price go down? Generally, from economic theory alone, when you have more supply and you have a fixed demand, price moves downwards. That's the general expectation, coupled with the general market conditions, the increase in Bitcoin dominance. Now you're seeing the macro conditions coming into play, the Bitcoin-based dominance increasing coming into play, and the increase of more coins as well being poured onto the market. As a result, in general, when you have a fixed level of demand and your supply is increasing, and the price as a consequence, because of that increased supply, you're having more supply than you have demand, the price is going to shift down. Now, that's going to happen this week, it's going to happen next week, it's going to happen the week after that, till there's a point where the reward begins to decrease relative to the demand that we have in the market. Now, the perception of scarcity is beginning to kick in. My perception is that we're going to go through this process for a couple more weeks until this is the case that we have more scarcity in the market, taking away that supply. With fixed demand taking away supply, the price will increase. It's a very basic course in economics, thinking through this rationally. So people are going through this process thinking, why is the price going down? Is it because the team's dumping on the market? What's happening? Is it the general cryptocurrency market? Is there something happening with Bitcoin dominance in general? Is there something that's happening specifically to the coin? There's nothing happening to the coin itself, but what I'm explaining around this process is we're continuing to make advances. There's no evidence to suggest there's foul play, but yet there's attributions around what the team is doing, but yet you're externally putting the blame on us and the team. I don't encourage that, but it's fair to ask the question. So let me pause before I move into like some of the positive aspects of the work that we're doing today, and then we could move forward.
Okay, so you want some questions?
Sure, we'll take questions, and then I want to wrap up as well.
You got it. Okay. So let's see. We have some here. Okay, so relevant to the sort of exchanges and things like that, we have sort of a two-part question. One is the listing of LPC on Cryptopia happened at almost the same time of releasing Logis Coin. Was that a coincidence, or was that strategic movement? Do you have any comments on that?
Sure. As we mentioned about LGS being a support project of LPC, it was definitely the aspects of serving as logistical support as products we began to develop. At the same time, we also mentioned on the last call that it was also an operational support project for LPC as well. When I mentioned in terms of operational support, helping to bring on more team members within the organization, and also to help us with operational costs. As I talked about earlier with LPC, we had a heavy dependence on community support in driving operations, being able to have team members, getting onto more exchanges, helping to get more sponsorship for conferences, but we did not get a lot of support in terms of community contributions to be able to list on the exchanges. As mentioned earlier, it was well over, initially the price was 12 BTC to list onto Cryptopia. Because it was 12 BTC, that's not something that we had sufficient enough within pre-mine to do. But yet because LGS is a support project to support not only the distribution and the logistics support in distributing out the ATMs and the point of sale devices and bringing all those components together for assembly and then sending them to our beta testers or for clients or merchants who want to use the product. But it's the case that we also had LGS for operational support, which helped to put us in a position to list on the exchange. So when you saw LGS pre-sale happening, operational support, once the pre-sale happened, we took some of the funds that we had within the projects to help us get listed for both LGS and LPC to list on exchanges. As you know, LGS was listed on Coin Exchange first, then went to Cryptopia. We also had funds to be able to now put us in a very comfortable position to list onto Cryptopia. So it's not necessarily a coincidence, but LGS was able to help us in for operational purposes for LPC in terms of being able to list on an exchange. But as we mentioned earlier, it is a support project from an operational perspective, but also from the point of view of being able to help us to distribute the products once we develop POSs and the ATMs. So it's not necessarily a coincidence.
Sorry, I was muted. Got it. Next question. Well, actually, we have two questions that are somewhat related.
Sure.
One is, I guess it's more of a comment. Don't forget to address yesterday's network vulnerability. We know it was solved, but I think we'd like to hear from you about that, just so that everybody knows that, we're sort of all set on that front.
Sure. There was a concern on the community. It came out from a post from a random member. Believe it or not, I got a few pings from people with GitHub accounts, relatively new GitHub accounts, pointing us to repositories and mentioning concerns that masternodes in general have problems and there's an exploit that you need to patch up immediately. When we go back to the concern, the person first question I ask is, okay, are you a community member? What's your standing? Does any other project immediately come over to another project and say, hey guys, you have a problem, fix it, or your community is you're going to lose all your LP or lose all your coins? There was one particular issue. We pointed us to a repository, and I began to ask the question. I'm like, guys, what's your standing in helping to support LPC Is it the case that you're an investor? Have you been involved in our technology? Have you been involved in our economy? Have you been involved in our community? I asked the question, okay, what is your standing? How are you contributing to us? How does this help? Considering that, they say, hey, Titrium did it. You should do it too. Titrium is not LPC. Titrium is not Dash. So it's one of the things that going through this issue of perceptions around trust, what gave me as an individual, what gave me as someone who's looking out for the best interests of our community, put me in a position to trust this random person who gave some recommendation on a potential exploit that's happening within the LPC blockchain. What I responded to that person is, hey, here's what we're going to do. As with any following our cycle for code review, we're going to look at our code, look at your code. If it's the case that there's something that warrants attention, then we'll address it. But otherwise, you perhaps could be a malicious actor who are wanting us to make the changes that you recommended in your source code to introduce an exploit to change our chain so that funds would be redirected from not only the investor community, not just the masternode owners, but also the regular members within the community of confirmation node holders as well. So this is one of the things where we took it into consideration. We gathered the evidence ourselves. We looked at our own code base. We posted it to say, hey, is it the case? Is there an attempt at social engineering to defraud an entire community to take funds from us and actually begin to put us in a position where we are now vulnerable, even though it's the case there's no evidence within the blockchain that we do have an issue. So we did post to the community on that, and I just want to reassure you guys that we're safe. Anytime there is an issue, we will make an announcement, as we did yesterday, to the community, letting you know what our standing is on a perception from someone coming from outside the community, making a recommendation to us about an exploit around all masternodes. So this is, once again, instead of attacking our community, now we have exploits and people attempting to make recommendations directly to developers themselves to try to persuade them to put you all in a vulnerable position. But if we are in a vulnerable position, we're going to let you know. We're going to let you know in advance. We'll post to the Discord. But once again, we need various levels of confirmation to be able to move on that.
Okay, great. And then the sort of related point was, and I think you sort of answered this already, but why do you think others are saying LPC is hacked, even though from the question asker's observation, it isn't?
Sure. Yeah, and it goes back to the same issue once again. And I think we're a pretty good project. And even by all standards today, looking at where we are in terms of Masternode Online and being on CoinMarketCap, being one of the top 25% projects on CMC within less than 3 months' time, people are going to talk about you. People are going to attempt to put perceptions and fears and introduce that uncertainty and introduce the doubt about the project. Even though there are great things that we're doing, we're the only cryptocurrency project in all the world right now that is introducing our technology within a top tier, largest university in the United States, known for its research and development, known for its development capabilities, and really making waves in the education space, which I think is one of the most important aspects around adoption, particularly with college students. Really, a lot of things that take place on university campuses and within movements. And I think this is a movement that's happening, and now we're introducing it within a college campus, building a formal relationship with the university to help us to push this forward. Nobody else is doing that. So I think we should take pride in the notion that we're doing other things people aren't doing. We're creating a unique brand. We are having these weekly webinars. We're addressing questions as they come, and everyone's showing their face. We're being transparent, unlike vast majority of the Masternode projects, where they're not disclosing, they're not being open with the community, they're not having weekly webinars, they don't have any partnerships, not only on the just regular business side, but also on the education side. They aren't building those bonds or trying to create that bridge that will bring us from very esoteric, unknown, into the mainstream and adoption from the masses. Even though there's a big disconnect between the masses and what they experienced with the financial crisis and the Great Recession and the view of cryptocurrencies, even though the two are inextricably linked in their development. There was a crisis, the institutions of the world of trust, the banks, the credit card companies, we went in a position that cryptocurrencies came into place as an alternative and solution, but the masses are disconnected from that. We want to help bring this technology into the masses and help to remind them there's a better way. There are alternatives. There's a future. But because you have people who are putting that fear, that uncertainty, doubt into the project, into the team, into the technology, into the economy, in the community, that's something that doesn't work in our best interest. So that's what I would take into consideration why people are attempting to do that. Because, hey, I have a new project. I'd like to get some leeway or increase our posture, our standing in terms of masternodes. But this is a change, and I expect more to happen as we get more and more market share.
Yep, absolutely. And I think it's also worth noting that, to this point, we've hit all the points on the roadmap, right?
Every single point. And and there are things that aren't on the roadmap that we've actually have been able to accomplish. So like the partnerships with Lumina, a content technology company that's able to build educational courses for institutions about blockchain-based technologies. They're pushing in their own space that's helping to drive value, not only for their organization, but for our organization as well. So I think that's something, having these partnerships and being able to make more and more inroads to introduce this to the masses, it's a great thing.
Okay. And that's kind of all the questions we have now. So if you want to get back to the agenda, I would say no.
Okay. With topics, we talked about the exchanges. Well, now we talked about cognitive biases. We're going to move into exchanges. I know we talked about earlier, introducing last week that, hey guys, we're on Cryptopia. We're turning a corner. We met we're meeting the milestones. Let me see if I can go ahead and share my screen again, even though right now we're just looking at Excel docs. Exchanges. Looking at the exchanges that we're listed on at this point, we listed Cryptopia last week, and this week, because of the community involvement, and if I could give you guys a virtual hug, we're manly here. I'm going to give you a man bro fist pump. Let me do that right quick. For the community involvement and you guys voting on IODEX. I think I had some issues pronouncing it, but one community member said IODEX. It will be IODEX until there's an official announcement. And I can hear it. I can see members say, hey, it's IODEX. So now it's IODEX. We voted. We put out the call. You guys voted. You gave your comments, and we're now listed on that exchange. It's not a top exchange from what I understand, but at the same time, it's one more place that we can add to get liquidity and price discovery. So I really want us to begin to, all the exchanges that we're on, let's help the exchanges that we're on to get more exposure. And every single exchange that comes to us and say, hey, list on our exchange, or we'll offer you 2 to 3 different trading pairs. I ask the question, are you on CoinMarketCap? If you're not on CoinMarketCap, where it can be listed, once we get volume on your exchange, we need at least $1,000 worth of daily volume on an exchange in order to be listed on CoinMarketCap, that exchange to be listed on CoinMarketCap.com. Some of these new exchanges, they come to us and I say, hey, we'd like for you to be listed on CoinMarketCap. It's mutually beneficial for us. We have some liquidity on the exchanges, some of the larger exchanges like the Cryptopia, the Coin Exchange, and those exchanges have actually begun to increase their rank as a consequence of us being in the number 1, number 2 position, or within the top 5. That's particularly the case in terms of our standing and daily volume on Cryptopia, and definitely the case with CryptoBridge. So these new exchanges that we're adding, we're in a position, we're in a somewhat power position to tell these newer exchanges, hey, if you want to list or want us to list on your exchange, push for your exchange to get listed on CoinMarketCap. And we will help you by giving you that $1,000 worth of volume to get listed on CMC. So people can recognize when they go to CoinMarketCap, hey, this is where you can get liquidity. And that's at this point, I think it's a good thing that we've listed on IODEX. So we can help them along the way once they get listed on CoinMarketCap. But all these other exchanges coming to us now asking for that. I'm not moving in the direction to get listed on relatively new exchanges, because we're pushing for top 50 exchanges, and then top 30, and then top 10. That's what we're looking for at the end of the day. With that said, now I'm going to move into upcoming events. So last week I was in Boston with Patrick and the VP, Vice President of Lumina Datamatics, Gordon Laws, and we were just talking about all of the things that we're doing with LPC, the use cases, the aspects around our economics, how we're trying to incentivize people to protect the network, how we're beginning to move into different projects like the full-time work of people who have skills in AR and VR, and for them to be able to get paid within LPC. And we made that call last week out in the community, and we did speak to, at the same time, people within China, students here in the US, and some executives from the country. We did have an opportunity to engage with them. I think it's important that we begin to build our global brand. That was one event, and now we're next week on the 31st, Patrick and we will be at the University of Central Florida for the kickoff. The semester's already started. Students are moving in, and it's the case they're moving forward. The students within the Human Factors program, they've already set up our first set of brown bags where we can have conversations and interact to get the projects kicked off. So now the task orders will be executed with the students that we begin to pull in to the various projects from the Human Factors program. And as background, and I get this question over and over again, what does a psychologist have to do with the technology? Well, I would say a lot, and there's a lot of evidence to support that position. When you look at video games and how games are structured and the mechanisms through which you increase engagement in video games, they have industrial and organizational psychologists, human factor psychologists to help structure the dynamics or the mechanics of the game to increase engagement. And that's one of the areas in which I've done extensive research within engagement. How do people interact with different systems to increase the probability that they will enter into the psychological state, which is the most optimal psychological state for productivity, for learning, for skill acquisition. And that's, some of you may know this as the flow state. Somebody being in flow. You may hear about it in sports. Hey, he's in the zone. Basically, those are some mechanics that are happening within sports where you put in the conditions to facilitate the flow state, to increase productivity, increase adoption. Psychologists, as human factor psychologists, they develop interfaces, but also INO psychologists are involved in determining what are the dynamics to facilitate adoption of a particular technology, which is one of the, I think, major things that we're facing as an industry. So that's why we're meeting with the human factors and the INO students to begin to kick this off. And at the same time, the PhD level human factors individuals, when they participate in the program and they get accepted, they aren't psychology majors coming from undergrad. These are individuals who have majors in mathematics, they have majors in computer science, and they have majors in engineering, applying to a human factors program because they want to fill out their skill set understanding psychology. So when I was in the program at UCF, there was a Human Factors 1, Human Factors 2, and Human Factors 3 course. In that course, you had not only psychology students and their factor students, you had industrial engineers, you had computer scientists, and you had other mechanical engineers in the program and taking the courses to understand what are the dynamics around affordances, what are the limits of human capabilities, and to understand how people interact with different technologies and to facilitate performance in those different environments, AR environments, VR environments, interacting with hardware, interacting with software. So it's critical for us to start with that group and also begin to recruit more outside of the space within computer science and within engineering, some of the traditional majors within CS to come in as well. But the performance solution group within UCF will have those participants. And that's actually a part of the process. So we'll be there on the 31st. We hope to document the process. We introduce our team, what we're doing. And there are a couple of investors who have already decided they're going to take a trip. For some reason, I don't know. They're convinced, but they want to see things on the ground. And it's good to touch people. It's good to have that interaction and talk and communicate. But we're taking pictures. We're having interactions with the students. And it's a day-long event. So feel free. You want to come to campus. I wish it was a day before the game and we could actually take a game or two, because I really look forward to UCF winning an outright full-blown national championship, kind of getting on the cocky side. But I want to see these guys really do some damage this year on the gridiron. And that's the upcoming event that's actually taking place on the 31st. We're locked in for the Blockchain World Conference. On the 4th, we will be presenting as well. I think that's a great opportunity for us to talk about the progress that we've made since the last conference. Also on the Thursday, there is Jabas talk about AI, which is the area that I come from, and those are the team members within Exchange and LPC, and I have that experience, and he wants to talk more about that. And how did we really come to this space? And what do we see some of the major challenges are? So that's going to be a very interesting podcast. And just to be featured with some of the luminaries within the cryptocurrency space, I think is a good thing to have affiliation actually to be interviewed. So it's an honor for me to have a much wider exposure outside of the weekly webinars and have those conversations. So that's going to be on Thursday the 23rd at 1400 Pacific time. So it's going to be 4 o'clock, 1600 or GMT -5, 1600 GMT -5, or Central Time at 4 o'clock. Central Time, 4 o'clock Central Time, or GMT -5, 1600. I know I'm bouncing back and forth between military, but those are the times that I use, and it makes sense. GMT -5, you're looking at 1400. So that's another upcoming event that's taking place. And we're also locking in our sponsorship for the Blockchain Business Summit. It's happening in San Francisco on it's October the 13th or 14th. It's solely going to be businesses and enterprise. How do you apply blockchain-based applications within enterprise? So being an I&O psychologist and working at IBM, the world's largest enterprise company, and also with tech company, and also within Infor, cloud-based organization, and also having experience educational testing service, the world's large educational technology company or assessment company. It's the case, most of the products that I built in the past, and even in the case with LPC, we do have an enterprise-based orientation when we're building a point-of-sale device linked to a masternode, where you're no longer having fees associated with using credit card transactions at the merchant level and also at the consumer level as well. Nobody wants to pay swipes. Nobody wants to pay 2 to 3%. If you're a business and you're at 2 to 3%, you're a 2 to 3% margin business, to the degree that you can get that 2 to 3% back from the credit card companies, that's going to put you in a better financial position to move forward in your business. At the same time, as a consumer, paying 2 to 3%, where the merchant is passing that 2 to 3% on to you to pay in terms of fees, that's not viable. We have to show that there are more options, and this is why LPC exists. This is why we want to compete with the traditional financial system, and I think targeting enterprise is important for us. So that's one reason why we're a silver sponsor in that event, and we'll be talking to primarily businesses at that conference in October. Any other questions? Okay, I think it was a great call, and feel free if you have any questions, or even if it's at the position where you have a solid case, where you've collected the evidence, you've thought through it, and you want to voice your concerns, and even if it's the position where you want to come on to the webinar and have that debate or discussion about certain things that we're doing, either with LPC, LGS, our strategies for building point-of-sale devices, our strategy for deploying students being managed by a core team here, and the beta testers, the organizations that we have lined up already for the pilots of the point of sale device, which will be launched first. Subsequent then next year, later on in the fall 2020, we're looking at the ATMs being able to come out, but the point of sale devices, those are first, and being able to have LGS distribute those through to our beta testers and our community members who want to try it out. Let us know. We're totally open to feedback. We do have an advisory council of investors within the community, and they keep us aligned. They talk with me, they interact with other members of the team to say, okay, what's really happening in the community, and at the same time they're giving us that feedback, so we keep our ear to the railroad tracks, and that if something were ever to happen, and God forbid it did happen, we have contingencies in place. And for some of you, you may think, how is this a scam? How we predict this is a scam at the end of the day? These investors are a core set of it. They've been here from the beginning. They begin to introduce themselves to let you know that, hey, they're a part of this advisory team, and the team is growing. So they do have access to information. They somewhat, not necessarily privileged information, but yet at the same time, they know about what we're doing, the keeping disclosure, and they ask the hard questions. And they constantly ask the hard questions, that the same set of questions that you ask. So this is how I prepared, not only for the webinars, but also just interacting with the public in general. So there is a Jedi Council. So if you would like to join the Jedi Council, I don't know if you need a saber or not, but it would make sense. Just reach out to me and some of the investors. I can introduce you to them, and then these teams. And we also foresee this being the case within LGS as well, where there's a council of investors, not necessarily holding an official position, but you can if you'd like, and then have an advisory. So now we're beginning to have some storytellers within the community as well, helping us out. So I thank you for the call. Thank you for your time. Thank you for your criticism. Thank you for your suggestions and ways in which we move forward. Because at the end of the day, iron sharpens iron. So if I'm cutting through butter every single time, we won't get things done. But that's the only way we're going to progress. We have to keep each other sharp. And thank you for your time, guys. Take care.